I just want to record the session. Okay, mic testing 1 2 1 2. I tried connecting to my AirPods. I think I'm connected. Can you guys hear me? Are you guys able to hear me properly? Because I'm connected to my AirPods. Just that Yes King can hear you. Let's go.
Yes, I can hear you.
Yes, I can hear you.
You guys can hear me, né? That means this thing is still using. Just hold on. This thing is still using the audio, the computer audio, not my AirPods. And settings. Just hold on for me, guys. It's not using test the mic. Just hold on. I just want to test the mic. Mic testing 1 2 1 2. Mic testing 1 2 1 2. Okay, I think it's good. I don't know why it's doing that. I think the mic should be good. Okay, it says I'm connected to the AirPods. Anyway, it's all right. It's all right. Let's begin, guys. Okay, so guys, what I'm gonna teach you guys tonight is I'm gonna teach you the secrets of boom and crash. Okay, I'm gonna teach you the secrets of boom and crash, how you can be able to kill boom and crash from a higher time frame perspective, and bringing it to the lower time frame perspective. So when you go to the 1 minute time frame, that's us scaling in and scalping the market, right? But our initial move, we always want to get it from a higher time frame perspective. All right. So one thing I'm going to start with is never combine trading with emotions, guys. Never combine trading with emotions. If you have to write it down, put it in your head, make sure you do that. Never combine trading with emotions. The reason why a lot of you lose and you always have it is because you are emotional. And everything that has money is emotional, but you need to learn how to detach your emotions from trading. Then that's when you'll be able to see the market clearly. That's when you'll be able to say, even if I lose or I win, I would have followed my rules. I would have done 1 2 3 4. But if you always want to kite, you always want to lose, and you're not gonna learn anything in the market. All right. So to keep it simple, what we have done is I know some of you guys have looked at the very first free or credit sessions of Boom and Crash, right? So we're able to take out a lot of things and only leave like 2 moving averages, exponential moving averages, and the relative strength index, okay? So those 2 moving averages, the first one is the 200 moving average. So period 200 method exponential applied to close. And I always like to keep it black. And there's no levels, there's no visualizations, you just keep it like that. Parameters period 200 method exponential applied to close, right? And then you just click OK. All right. So now the purpose of this movie.
Yes. Sorry, boss. Can you write them down probably on the screen so that we can capture them? Because when you were putting them in, it was blank. We couldn't see.
Is it?
Yes, we couldn't see when you were putting them in.
So you want me to putting it in, or you want me to write it down? And then
okay, can I let me write it down now? Okay. What is it? 200?
There, can you see it now?
No, the screen is gray.
Why? Guys, can you see my screen? I wonder why. Can other guys see my screen properly?
We can see the screen. The problem is that when you open the moving average, the indicator, this thing.
Oh, shucks. That sucks. All right, let me write it down.
We can see a window, but it's not clear.
Yeah, I don't know why it does that. That's very weird of Zoom. But anyway, it's fine. Okay. So I said the first moving average that we use is this one, right? So the first moving average that we use. Fuck, why am I writing average like this? Okay. So the first moving average that we use, the period, right? The period is 200. Okay. The period is 200. Method will be exponential. Okay. Method will be exponential. All right. And then shift will be 0. And then you apply to close. You apply to close. Okay. So that's the first moving average that we set. Okay. The 200 moving average. Okay. Period 200, method exponential, shift 0, you apply to close. Okay. So, like I was saying, the purpose of this moving average, it helps us to determine the trend of the market, right? It helps us to determine that the trend of the market, especially um, in the 1 hour time frame, right? We're able to see the trend of the market to say if price is below. Okay, let me illustrate it like this. Let me say this is the 200 moving average, right? So if price is below the 200 moving average, we're saying that price is in a what? Price is in a downtrend, okay? Because price is below the 200 moving average, no matter the time frame, whether it's the H1 time frame or whether it's the M1 time frame, okay? But once you see price being below the 200 moving average, then you know that, especially when we trade in crash 500, 300, crush 1000, you know that there's a good chance that price is going to go down some more. Okay. So you always want to check also what the 1 hour time frame is doing in terms of this moving average. Just to go and peep on the 1 hour to like, oh, okay, is price above the 200 moving average or is price below the 200 moving average? Especially for crash, right? So it's vice versa with boom, right? So for crash 500, for crash, if price is below the 200 moving average, it's a good sign that price can still go down and sell. That means it's signifying that it's a downtrend. If price is above the 200 moving average for boom, then that means, price is in an uptrend, which is what we want to see. Price being in an uptrend, right? For boom, because that's when we'll be able to get those nice spikes and all that. Okay. And that's for catching spikes. Okay. So another moving average that we use, guys, all right. Another moving average that we use, okay. Another moving average that we use, and this one will be explained further. Okay, what's happening now with this? So your period will be 10, okay? Method here will also be exponential. Method will be exponential, okay? Method will be exponential, all right? Shift will be 0, and you will apply to close. You will apply to close, okay? These are the two moving averages. So this moving average, which is moving average 10, okay? This moving average, which is moving average 10, right? This moving average, which is moving average 10, its purpose is this, right? So let me say, for example, you're on the 1 minute time frame, and this is the 200 moving average, right? That's a 200 moving average. And then we see price coming from the top on crash, then it crashes below, closes, and then price spikes, right? So what we're expecting on the 1 minute is with the 10 moving average is that when price after spiking approaching the 10 EMA, price should spike down. Approach a 10 EMA, price should spike down. Approach 10 EMA, price should spike down. So when we see this EMA, it will be following price like this. It will be following price like this, right? When it comes there, price should what? Price should spike. Come there, price should spike. Come there, price should spike. Come there, price should spike. Okay, so that's the whole purpose of the 10 EMA, especially on the 1 minute time frame, is that we use it to scale in, right? We use it to scale in the market to say if the market comes and touches our 10 EMA when price is below the 200 moving average, then we know that price is going to spike. That's us now scalping crash and boom, right? Same thing with boom, just vice versa, right? That when price is above the 200 moving average, when price touches the 10 EMA, price will spike. Touches the 10 EMA, price will spike. Touches the 10 EMA, price will spike. Okay, so just always keep in mind regarding these two important moving averages, right? So if you've seen the previous boom and crash videos, you'll see that we had the Bollinger Bands with the moving average 20. We took those out because they just clustered our charts, right? I like clean charts. I like to keep whatever is working. The rest that is not working, we don't need it. Therefore, we just shove it to the other side. Okay. So another thing that I want to write down before we even proceed, it's the relative strength index, the RSI, right? What some of you know as the RSI, okay? The what you call this? The parameters of it, because you said you can't see my charts, okay? So with the relative strength index, your period, right? Your period will be 14, okay? Your period will be 14. And what you'll do is you'll apply it to close. You'll apply it to close, okay? And then you can style it anyway. I've styled mine as red. Okay? You can style yours anyway, blue, purple, pink, whatever. It's up to you, okay? So my style is red, all right? So the levels now, coming to the levels of the RSI, these are very key levels that you guys need to write down, okay? So when we come to level 30, okay, level 30 is a what? Is a strong buy, okay? You need to put them like this. Level 30 will be a strong buy, all right? Level 70, right? Level 70 will be your strong sell, okay? Strong sell on level 70. Level 50, we don't even consider it. Level 50, we don't even consider it. So it's fine. And just leave it like that. Doesn't really do much. All right, then we jump to level 60. Level 60 is a sell, okay? Level 60 is a sell. And then we come to level 10, all right? Level 10, right? It's the extreme buy. Level 10 is the extreme buy. And then level 90 is the extreme sell. And then level 40 is a buy. Okay, level 40 is a buy. Okay, I hope that makes sense, guys. All right, I hope that makes sense. Okay, so there's gonna be two lines that we're gonna plot, especially when we're trading cash 500 on the RSI, right? Those lines on the RSI, guys, those two lines like this. It will be two lines like this on the RSI at the top, okay? These are what we call sensitive lines that will give us really nice spikes on the RSI, okay? So line number one, let's take line number one as the one at the top, okay? So you put a line, you insert a horizontal line, right? At 79, 0.05, okay? you're gonna insert a horizontal line at 79.05, and this line is for big spikes. If you want to catch those nice big spikes, they'll be at that level. All right, and another line number 2, will be at 87.96. 87.96, and also this is the one that will give you really nice spikes. Sorry guys, let me just grab a water. I don't know why I'm having hiccups. Ah. Okay. All right. So, like I said, these are the very two sensitive lines that we'll have on our other side. Okay, 79.05 and 87.96 on the other side. Okay, I believe that these are the only what you call this? These are the only lines that you will need, guys. Okay. For the ones for, okay, let me just put the ones for uh, uh, when we're looking for spikes on boom, whether it's boom 500, boom 300, boom 1000. Okay, so you'll put two horizontal lines at the bottom of your RSI. Okay, these lines guys are at the bottom for boom, and then for crash they're at the top of the RSI. Okay, so line number 1 on boom and on boom, right? It will be at 14.58. Okay, 14.58. All right. This will be one of the sensitive lines. Okay, for your big spikes. Okay, and then the second one, which is line number 2, will be at 18.50. Okay, also very sensitive to big spikes in the market. Okay, very sensitive to big spikes in the market. All right. So, guys, okay, I think I've explained everything here that you need to set. So you need to write them down if you can, guys, in terms of these two moving averages that we use and the points or the settings of the RSI. Okay, in terms of what period to use, the levels that you need to have there. These are the only levels, and then these are the 2 lines that you put, 4 lines that you put on the RSI. On the RSI, you need to make sure that it's at 79.05, 87.96, and we only utilize these when we are on the 1 minute time frame. Okay, we only utilize this on the 1 minute time frame. 1 minute time frame. We only use them on the 1 minute time frame. Okay, on boom and cash, guys. On boom and cash. Okay. So one thing to note, or what I've seen is what do they call this? Why is it running away? Okay, let me put it in this way, right? So if we get to look at getting the market really nice and having it crashing at these sensitive lines and these levels right here on the RSI, it's when the market is really trending to the downside. Let me speak now for crash 500, crash 1000, crash 300, right? But one thing you need to know with crash 500 is that when crash 500 is in an uptrend, right? When crash 500 is in an uptrend, now we're speaking about the M1 time frame, right? Price will always crash at level 90, right? Price will always crash at level 90, which is the extreme sell. Okay, price will always crash here. If the market is on an uptrend, all right, price will always crash at level 90 on the 1 minute time frame. Okay, so when you backtest that, you'll also be able to see that, oh, okay, price is moving away from being a bearish market, instead it's buying. But you know that if price reaches level 90 on the RSI, it will spike, but you can't hold it, right? Because sometimes you'll find that price is above the 200 moving average. So that means it won't spike the way that you would want it to spike, okay? So I'm moving to we're moving back to the charts, guys. Do you have the indicators written down somewhere? Right? All right. I think everybody has them written down somewhere. Okay. So now let's go and put them. All right. Let's go and put them literally. Okay. So you guys can already see the 200 moving average, né?
Yes, we can see.
Okay. So right now I'm just gonna plot the 10 moving average. You guys said you can't see it. So I'm gonna make it not dark orange, orange red. Yeah, I'm gonna make it orange red. Okay. You can see that the one that's moving with price, huh? It's moving with price. If price does this, then it moves with it. Okay. And then I'm gonna put in the relative strength index. Okay. So you guys said obviously you can't see the what you call this. You can't see the levels, né?
Yes,
Right
we
now on
can
my
see.
screen. You can see.
No, we can't see, but I think we'll be able to set it up.
Okay.
No, we can't.
problem. All right, no problem. So I'm just busy setting it up to say level 30. Remember what I said with level 30? It's our strong buy. All right. Ish. Level 30 is our strong buy. Remember what I said, right? Let me just add a couple. Okay. Level 30 is our strong buy. Then we have level 70, right? Which is our strong sell. Level 70, which is our strong sell. And then we have, I said level 50, we can just leave it like that. Yeah, level 50, we can just leave it like that. Then we have level 60. Level 60, which is our sell, right? Which is our sell. And then we have level 10, which is our extreme buy on level 10. And then we got level 90. We got level 90 in the market. That will be your extreme sell. That will be extreme sell. Then you have level 40. And your level 40, that is your buy. Okay, level 40, that is your buy. Okay. So like I said, for me, I like to style it red. All right, I like to style it red. There's no levels to it, really. Yeah, there's no levels to it, honestly speaking. Parameters. So period is 14 in terms of the parameters. So what we've been setting is the levels. So the period of the relative strength index is 14. You apply it to close, and I said you can style it however you want. You know, you can always style it however you want. The RSI. Okay, you can always style it however you want. Okay, so in terms of the levels, I'm gonna make them black. All right, I'm gonna make them black. Ah, man, I wanted to change this. Why can't it change? Okay, there you go. Changing. Okay. All right. Do you guys see it now? Can you guys see the RSI?
Yes, we can see, except the lines that you said, the horizontal lines.
Yeah, I haven't set them. I haven't set them. I just wanted to find out if everyone can see the other side before we proceed. Okay.
Yes,
So if you
other
guys
side
can
very
see the
clear.
other side, perfect. If you guys can see it, that is perfecto. Just hold on. I just want to do something. Properties. I just want to increase the size of this so that it's more nicely, yeah, okay. It's nicely visible now. It's nicely visible now. Okay. So the two levels that I was speaking about, guys, what you'll do is you'll take your horizontal line, as you can see here, I will click it, and then your first line will have to be at 79, right? 79.05. 79.05. Okay. Parameters 79.05. See, I even went to properties to make sure that it's exact. You know what I want. You know, it's exactly what I want to be at 79.05. Okay. And then I can also this one mark it probably orange red. Okay. Any color that you want, guys. You'll choose any color that you want. I'll just make it red. Okay. And then the next line, which is line number 2 for big spikes, very sensitive lines for crash pairs will be at 87.96. Right? 87.92. All right. It's at 92 right now. So I'm just gonna make it to be at 96. But even if you are runabout there, you're still good. You're still good. Even if you're runabout there, I think you're still very good because you have a good indication of where price will spike. Okay. So when we're trading the what you call this? When we're trading boom, right? When you're trading boom pairs, right? So your first line will be at 14.58. All right, that's your first line. It will be at 14.58. There you go. That was perfect. It will be at 14.58. All right, and then this one, let me see which color I can go for. Let me go for the blue. Okay, let me go for the blue with this one. All right, so that we can differentiate them. So we got the blue, the first sensitive line for boom, and then the second line will be at 18.50. All right, 18.50. These ones are very close to each other. These ones are very close to each other. All right. See 18.75. I just want to change it to 18.50. Okay. 18.50. All right. And those are our sensitive lines. All right. Those are our sensitive lines when it comes to boom and cash. Okay. Let me just quickly save this as a template so that whenever we we can, just use it as a template, right? Say this is the boom and crash strategy. Okay, this is a boom and crash strategy. All right. Then when you go to other pairs, we'll be able to just replicate it. Okay. So those are the settings, guys. Okay. This is what your chart needs to look like, especially when you're trading boom and crash. When you're trying to look for those spikes, trying to scale in. Okay. So already what we can see is on the H1 time frame that price is below the 200 moving average, right? So that means we have a really pretty good chance for price to still sell, right? To still decently sell on the market, right? So if we go to the 1 minute time frame, I want you guys to see this, right? I want you guys to see this, right? So you see that, let me do this. You see that where price spiked here, and you look at the RSI, where was the RSI? At those sensitive lines, right? So you'll know even when you are about to enter your trades, you can prime your cells to be run about here. Enter them, knowing that even if you don't spike here, you can spike at the second sensitive line in the market, right? So, and then you know that you can hold this trade up until it gets to the strong buy levels, and then sometimes you can take your profits when prices here, or if you've seen on the 1 hour time frame to say the market has potential to come where the market has potential to come to this level right over here, then you can hold this trade until it comes to 6645.254. Okay, but what's nice about knowing where you're gonna take your profit from a higher time frame perspective is when you are on the 1 minute, right? This is what I was telling you guys about the 10 EMA, the 10 EMA, the 10 exponential moving average. You see, when price is below the 10 EMA, if you prime yourselves properly, touches the 10 EMA, price spikes. Comes touches the 10 EMA, price spikes. This one went just a little bit above and used the previous spiking point. Use the previous spiking point, and that's why price fell, right? So it's very possible that price can come, hit the 10 EMA, then spike to the downside, right? Very key and very possible that price can be able to do that. Okay. So if we even go back, right? Even if we go back, you will see that price does do that, right? You can see that price does do that. You see what happened with the recent spike that just happened. You see it. So you will know that after 3-4 candles, you prime your yourselves. When you see that, okay, price is gonna come and touch the 10 EMA, you enter yourselves, and then price will spike with you. And the reason why you'll feel confident that price will spike with you, because you can see that price is below the 200 moving average. Therefore, you have confidence enough that, when price touches the 10 EMA, it will spike. Even if it doesn't touch, then that's when you'll space out your entries to say, then price will use the previous cashing point. That price will use the previous crushing point, and then you'll know that, okay, I'm gonna spike here. Let me just put myself, and then you're gonna spike. Okay. I just wanted to go to the other side and show you guys. Okay? So you see, these lines are very sensitive, guys. Very sensitive. When price comes to these two lines right here, it tends to spike, right? So if you really, really, really prime your sells and your buys very well, you will always be nice. Okay, so I always try to avoid taking any sells when price is in the middle, right? I wait for price to get to these levels right here on the other side. When price gets to these levels, I know that this is a very sensitive. These are very sensitive levels that price will spike, right? Like here, you can see that price was doing what? Price was trending to the upside. You see that price is above the 200 moving average. That's why what I said on the whiteboard to say that when price is in an uptrend, meaning when it's above the 200 moving average on crash, it will always spike away at the 90 level. And the 90 level is this one right here, the extreme sell, right? Where just above the 87.96 sensitive zone that we have right there. Price will always spike there. But since price is spiking while it's trending to the upside, you won't hold this trade. Literally after one spike, you take your profit. When price comes back again at that level, you put in again your sell. If it spikes, you take your profit. It comes because, right, you can see that price is doing what is that it's trending to the upside. But usually what I do is after price has spiked, I just wait for price to, sometimes price will come to the 10 EMA and then spike, right? I know that if price doesn't spike at the 10 EMA, then I take my profits and then I'm out. But sometimes I can tell that, this price is still doing this. Therefore, you know what, let me relax, right? But once I see price doing this, trying the attempts to come into the 200 moving average, then for me, I know that price is ready to do what? Price is ready to actually come and be below the 200 moving average. Then we can just somehow, enjoy the movement of price, right? As it comes down. So besides the 200 moving average and the 10 EMA, guys, what you need to know is that on the 1 minute time frame, price will always respect the previous levels where it spiked. Like here, you see this previous levels where it spiked. See, price comes, it spikes. So even if your price doesn't get caught by the 10 EMA, you know that it will always go and try and find the previous spike, and then that's where it will spike, right? And that's where it will spike. So that's what it is. Working also with the RSI, okay? Working together with the RSI. Any questions?
No, everything's clear to now.
Everything is clear, no? Okay. So I think, guys, it is very key. I think it is very key from a higher time frame perspective to know what's happening with the market, right? So, for example, let's look at I'll just have to raise all my key levels here. It's fine. All right. Let's look at cash. Well, boom 500, right? We saw that the reason why boom 500 started buying is because the market gave us a star. The star was respected, and the market went to the what? To the upside. So we kind of knew that this market is going to buy, and also you see that it got out of the trend that it was in. It got out of the trend that it was in and closed above it, right? So we're confident that the market is gonna go up, right? And it's still going up. I'm still actually holding these trades, okay? So there's a greater possibility that the market can go there, right? Or it can turn from this key level, right? Price can turn at this key level, right? In the market, very possible that price can turn at that key level. All right. So you want to mark those key levels. These are also your TP zones. These are your TP zones. Okay, that's a key level because why? The market has tested this level before, right? You can see price bounced off it, came back, came to test it, and then went down. So there's a great chance that if price comes here, it can come down or it can break above it and go up, right? So obviously, when we see this, we know where price is going. So therefore, we can go to the 1 minute and scale in on boom 500, right? You can go to the 1 minute and scale in on boom 500, right? So you can see also on boom 500 what happens, guys. That price always respect these key levels. These are very sensitive lines on the RSI. You can see the way that I've drawn them. Look at the precision of them. Just look at the precision. That's why I said, you need to enter them the way that I've given to you. 14.58, 18.50. Very precise lines that the market respects on the 1 minute time frame. And you can see like when price comes and touches that 18.50, what happens? Spike going to the upside, right? Very beautiful. Very beautiful. Okay. Let's look at the sub. Let's look at the sub. Okay. That's when price got out of this pattern right here. Right? You see price is gaining momentum, came to this line, spike, strong buy, Then the market just continued spiking. And then when it was receiving a breather, you don't panic. You wait for price to come to your line, to your sensitive line. What happens? Price spikes to the upside, right? Comes back, spikes, comes back, spikes, comes back, spike. And you can see the reason why price is, respecting even these levels of the RSI and spiking where it's supposed to spike. It's because price is above the 200 moving average. Okay. You can see that price is above the 200 moving average. That's why price is doing what it's doing, right? It's really respecting and respecting the strategy very properly. Okay. So, and it's all because of the higher time frame, guys. Once you understand from the H1 time frame perspective what the market wants to do, right? Then it makes it easier for you to go down to the lower time frame and capitalize what we call scale in into the market, which we'll talk about when we discuss market structure, right? We scaling in into the market on the 1 minute time frame. So it's more or less scalping, right? So instead of just entering two positions here and just holding it, we're saying that on the 1 minute you can find more entries, you can capitalize on your move. So if you have a $50 account, just from this move, it would have made you at least about $200, $300 if you use the correct lot size, correct positions, right? And that is the power of scaling in on the 1 minute time frame, right? That's the power of scaling in on the 1 minute time frame. Let's see Boom 1000. All right. So what we can see with Boom 1000, I'll also remove it like this. Okay. What we can also see with Boom 1000 is on the the 1 hour doesn't look as nice. The M30 is more detailed, right? You can see that this was a correction that the market was in, therefore creating what we call a descending channel, right? It was creating a descending channel in the market, right? It was creating a descending channel, and a descending channel is one of the reversal patterns in the market. And we saw that the market did reverse over here, right? Price depleted, market created a star, then price went to the upside. So if we had to go to the 1 minute time frame, and you look at the recent price, right? You look at the recent price, you'll see that, you were gonna kill it, right? You were gonna kill it. Obviously here, price took some time. You see, it didn't respect this previous level. And the reason why is because price was getting under the 200 moving average, right? Price was getting under the 200 moving average. That's why price stalled to do what? You can see here how it stalled, right? That it did come. If I use the crosshair, you can see price was at the extreme buy sensitive line at the RSI. It spiked, but it didn't hold in terms of going to the upside. That's what I was telling you guys to say. Once you see price not spiking at the 10 EMA, then you take your profits and get out, right? You wait for price to come back at the RSI at this sensitive level. You put your buys, right? You put your buys. If price spikes, comes back again, and it doesn't spike at the 10 EMA, you take your profits, right? And then you can see how price actually took some time, right? You can see even here it entered at these sensitive levels. We thought it was gonna spike, but it took a little bit longer to actually do what? To actually spike, but it eventually spiked. It eventually spiked, right? So if you would have known where the market is gonna go, you would have held this trade to say, I'm gonna hold this, right? And then you can see that even if it didn't spike at the 10 EMA, if you would have held it, price, continued to go to the upside. And that's all because because you understand at the higher time frame perspective what price is doing there, right? You can see price came, spiked, came to your sensitive level, spiked, right? So you can be that trader to say, you know what, when I trade boom and crash, I only wait if price, the thing is, guys, what you need to remember, if price has left you from these sensitive levels, when it goes down, you're just waiting for price to come to the 10 moving average, exponential moving average. Then you place your buys, and then it'll spike with you. And if you know where price is going, you can even hold it on the 1 minute time frame, right? But never try to take, or be confident enough that price is gonna spike at these levels, because sometimes you never know. That's when price is exhausted and it says, you know what, I'm gonna sell for a minute, therefore your account gets blown, and then price spikes again to the upside. You do not want those kind of things, right? So obviously, if we're looking at this price and where it wants to go, right? If we're looking at this price and where it wants to go, we can see that this price wants to go and test this level right over here, right? It wants to go and test that level over there at the top. So, even from now that, there's good opportunities to take boom 1000 to the upside. But what I will wait for on the 1 minute time frame is I will wait for price to come to these sensitive lines. As long as price is still above the 200 moving average, I will just wait for price to come to these sensitive lines, which is the 1850 and 14.8. Then I can punch in my buys, and then it will take me to the upside to go and hit that TP that is on the M30 time frame right over there, right? To hit this TP at the top. Okay, so that's what I will wait for at this moment of time. Okay, same thing with no. What are we analyzing? Boom. Same thing with boom. With boom 500. You can see from this point that price is failing to really push to the upside. So you can see from the way that it's even spiking, it's failing to actually spike some more to the upside, right? And that this can be a good indication that price is really not keen to go to the upside. Therefore, sometimes you don't want to force price to go to the upside. Instead, wait for price to come to the sensitive lines right here, which is the 1850 and 14.58, and then you'll take your buy that will take you to the upside. Okay. Let's look at this is Clash 1000. This is a Clash 1000. Okay, Clash 1000 is crazy, but what we're seeing on the RSI, right, especially on the daily, that we've reached an extreme sell zone on the RSI. All right. So what we just have to find and plot a key level, right, to say that this can be a very good key level in the market that price can use to turn, right? That price can use to turn in the market, right? It's a very good key level that price can use to turn, right? I remember when it was here, we thought, okay, price is done. Price is done. We thought price is done. It did close below, and then it just continued then to go up. So we're like, okay, then that means it's not yet ready. But also it might use this spike that happened right here. It might use the spike that happened right here as a key level in the market, looking where the RSI is right now, right? So let's go to the 1 hour. Okay. So I think it might come there or spike even before that. Very possible that the market can do that. Very possible that it can do that. Okay. So you see what I'm saying, guys? When price is trending, when price is above the 200 moving average, you can still get some spikes, even though it's going to the upside. But remember what I always said, right? After prices spike from this level, you don't hold, you take your profits and go home. You see, it comes again, it spikes. Take your profit, go home. Especially when price hasn't touched the 10 EMA. For me, I wait for price to say, well, there's a possibility of it touching the 10 EMA, then giving you another spike. So if I see that price didn't hit the 10 EMA, then I'm out of the market. Then I'm out of the market. You see at this point, it spiked, came back, touched the 10 EMA, spike, came back, touched the 10 EMA, spike. Here, touched the 10 EMA, spike, and then here it didn't, and then continued to go up, right? But as it went up, it was going to our sensitive lines right here, which is the 87.96 and 79.05, right? If you would have entered at these lines, space out your entries when price comes here, you would have been in what? In profits, you take your profits, you go home, right? Or you would have waited for price to come in, test the 10 EMA. If it doesn't spike at the 10 EMA, you take your profits. You take your profits because that's telling you that price doesn't want to come yet below the 200 moving average. Therefore, it's not as yet ready to give us that nice sell that will take us to the downside. Therefore, if it doesn't spike here, you take your profits, you are out of the market. You wait for it to come here, right? Obviously, that's why I was like, the bigger time frame is very key also. It's very key in the sense that, you'll be able to mark out very key levels in the market. And then you can use those key levels to say, okay, when price comes to that point, and you also look at your 1 minute time frame, then you see that the market is doing this. When you see that price is overlapping the extreme sell, then you can be able to place in your sells as price approaches that key level in the market, right? Or what you can do is you can wait for the market to spike, close below the 200 moving average, then wait then for price to come and retrace under the 200 moving average. Then you'll know that price will always sell at the strong sell and the extreme sell. Okay, so quite easy to grasp and to apply. Very easy, very easy to apply. Okay, this was cash 300. Very weird freaking pair. I don't know what it's been doing. It's been consolidating or whatever. I don't know for how long. And let's go to the 1 minute. It's a mess. It's a real mess. But anyway, cash 200, same as cash 500 and cash 1000. As I've told you guys, look for price to come at these sensitive two lines. Then you can take your sells. That's it. Then you can take your sells. You just need to wait and see, is price approaching these two levels? If it is, you prime your sells properly, price will spike with you, right? And then if price is below the 200 moving average, then you can take advantage of price touching the 200 moving average and then spike 10 moving average, then spike. Okay, can even see here, the reason why price spiked. Spike. All right. So any more questions, guys? I believe that I've touched everything that I needed to touch on the boom and crash and how we've simplified it, right? And how we've been able to simplify it as the years have passed by. So you see even here on cash 500, right? You don't panic, you don't enter here. You see where the RSI is. Wait for price to come to this level on your RSI, then you can start selling the market, right? You can start selling and enter your sell limits, and just wait for price to reach that point. Then you'll be able to sell properly. Okay. Nice spike. See, power of the 10 moving average, guys, especially when price is above the 200 moving average. See here, price came down, spiked, come touch the 10 EMA spike, right? Very, very powerful. Very powerful. Quite powerful. All right. Quite powerful, guys. Can you see? Any questions that anyone has?
Yes,
Question?
yes, I've got a question.
Yes,
Like
yes,
for
yes.
instance, at your extreme left, né?
Yes.
It touched it's above the what you call the
200
the
moving
200.
Yes.
Yeah, the one before that. No, that
This
the
one.
next one. Yes,
This one.
yes.
Yes.
So ideally, what one would have done there is to get out when it first touched the 10 moving average and it
Yes.
didn't spike.
Yes. If it didn't spike at the 10 EMA, you take your profit. You get out, you take your
Oh,
profit. That's how I gauge whether do I hold or do I not hold, right? So sometimes after it didn't spike, after touching my 10 EMA, I just see 1, 2 candles. I see this thing is not spiking. Then I take out my profits, right? Because look at this good example right here. You see it came down, right? And then it was at the strong buy, extreme buy, at our sensitive line, and then it spiked, right? And then you can see it was playing at the 10 EMA, right? You can see at least after 1, 2 candles, then it spiked. Like, you get what I'm saying? So sometimes I don't rush it. After it didn't touch my 10 EMA, I look, okay, let me count 1, 2, 3 candles. If it hasn't spiked in 3 candles, then I'm out, right?
yes, sir.
After the 10 EMA, if it didn't spike after 3 candles, I'm out. Just like that, right? And if you can see, even this 10 EMA, sometimes when price is above, you can see sometimes it will give you 1, 2, 3 candles, then spike. You can see here it gave us 1, 2, 3, 4, 5 candles, then it spiked again. You look at the recent price here, where it just spiked now. You see, 1, 2, 3, spike. You know what I'm saying? Even here, 1, 2, Fed, it spiked. All right. So that's the power of the 10 EMA. And thank you for asking that question, man. All right.
Thank you, sir.
So when price is above the 200 moving average, guys, you can always eat. You can always eat. You can even be confident enough to use a bigger lot size, right? Knowing that, let me enter. If it spikes with me, I'm in profit. If it price comes and doesn't spike again at the 10 EMA, you take your profits and then you're out. All right. Just like that, you're out. Boom. Just like that. That's how you scalp. That's why it's always better. It's actually way better to grow your account using the boom and crash, right? If you know what you're doing, you'll always profit on the boom and crash, right? Especially when the market is trending. You need to take advantage when the market is trending, either for boom and crash to the upside, cash 500, cash 1000 to the downside, right? That's when you'll be able to capitalize on really good moves. That's when you can be able to capitalize on really good moves. Okay. Let me see. This one is crazy. This one has been on a selling. It has been on a selling spree. Boom, 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 300. Boom, 300. It's been selling for days. It's been selling for days, right? And you can see from that's the H4 time frame perspective. Let's see the 1 hour. You can see on the 1 hour time frame perspective that price is below the 200 moving average. Imagine on the 1 hour. That's why this price has been selling the way that it's been selling, right? And not giving us enough buys to the upside. But you see here, it tried giving us a double bottom to take us to the upside, but I think it's failing to take us to the upside, right? Quite a weird pair also, the way that it spikes and moves, but it does respect market structure, right? You can see these spikes, very kiddy spikes, even though price did come to our extreme buy level. It spiked, touched the 10 EMA here, spiked 10 EMA, spike, but then failed to keep up to go to that side. You take your profits. I wouldn't have entered here. I wouldn't have entered at these levels if price on boom 500, boom 1000, boom 300, it's below the 200 moving averages, and I'm not seeing price at the extreme buy and my sensitive levels, I won't enter, right? But when I see price approaching my sensitive levels, then I will enter, knowing that there's a possibility of price shooting to the upside, touching the 10 EMA, and then continuing with that trend to the what? To the upside. So you can imagine how many times you would have scaled in here. Let me say maybe you open 5 positions here, price spikes again, touch the 10 EMA, you open another 5 positions, another 5 positions, another 5 positions. You can imagine where you would have been, you know, where price is right now, if you decided to take your profits right there. Obviously, when you see now that the spikes are no longer enough, that's price depleting, right? Price is telling you that it's exhausted, that it needs to gain some momentum. It needs to breathe before it can give us more spikes again, right? And this we can call it the breathing cycle of the market, because you can even see even the spikes are not really as good enough to really take you to the upside and for you to be happy. Therefore, you know, you don't panic, you realize either you take your profit or you can hold if you recognize to say, okay, my take profit one is going to be at this level because you saw it on the H1 because it's your key level in the market. Okay.
Thank you, sir.
All right. So any more questions, guys, before we close this session? Any more questions? Obviously, the session is recorded. After it's done, I'm gonna send it to you guys so that you can go over it over and over again. But what I would ask of you guys, go and back test this, dude. You make like serious money on this if you follow the rules, right? Don't have FOMO, because I think a lot of us, when you trade, we have FOMO, right? Wait for price to come to your extreme buy and your extreme sells, especially when price is not especially when, well, let me make an example for boom 500 or boom 300, especially when price is below the 200 moving average for boom, you know. Wait for price to come to, you know, your sensitive levels, 1850, 1458. Wait, you know, wait for price to come there, then you can take your bias, right? If you have FOMO, you can use buy limits so that you don't have that constant fear, like, what if the market leaves me, you know, what if it spikes before me? Remember, even if it spikes, you can always prime yourselves when the market comes in to your 10 EMA, that you can enter, spike, enter, spike, enter, spike, enter, spike. Then you're out of the market just like that, right? So don't have FOMO in the market, guys. Do not have FOMO in the market. FOMO has blown a lot of accounts. Okay? There's blown a lot of accounts. So with this one, boom 1000, you know, you can scale in on it quite a lot, right? You can scale on it quite a lot. You see prices above the 200 moving average. You can see on the other side, prices coming to our buy level, but I think it's gonna hit it's gonna probably even buy on the strong buy and then go to the upside, right? Gonna come to a strong buy and go to the upside.
Yes, King.
Sure, my guy, talk to me.
Yeah. Okay. It's quite clear. Now I wanted like to ask in another way, like just using, let's say, just the candles themselves. How
Yes.
do you? Is there any other pattern apart from just looking at the RSI? Is there a combination of candles that you can say that, okay, this is at an extreme, like for example, this one was buying, and you exit. I don't know if I'm a bit clear on that one.
Like candlestick formations that will tell you to say, okay, you can take a profit there, or
And the market, yes. Or in another way again, which is a suitable time frame that you can really use to determine that?
So when I'm on boom and crash, obviously I remember we're gonna discuss market structure, but I will start my analysis on what you call this. Let me do this. Let me show you how I actually get to. I'll put in the naked chart. Let me put in the one with time. All right. So this is boom 1000, right? You can see
Sure.
we're on the weekly time frame. So I always start my analysis on the weekly time frame. On the weekly time frame, what I do is I want to mark out my key levels, right? So I can tell where price is right now. This is a key level. Why am I saying that it's a key level? Because price has what? Price has been there before. You know what I'm saying? Price has been there before. You know what I'm saying? You see price came, spiked here, and then went to the downside. It came again. Literally price rejected this level twice, okay? Which makes it a what? Which makes it a key level, right? So I'll put in my key level right here. So, okay, that's a key level according to me, all right? So you can see that at the above there, that's also another key level, right? Why? Because price rejected at that level before, right? So that means there's a possibility that if price comes to this level, what will happen? Price can start selling to the downside, giving us a what? A double top. You get what I'm saying? So key level, you mark it, right? Very key to mark your key levels because they will tell you when to take your profit, when not to take your profit, when should you be trading that level, and then you'll stand a better chance, of milking the market in that sense. You can tell also that this was a key level in the market, right? Right here, you can tell that this was a key level, right? Because you can see here, price came, price rejected, then went down, and then price tried to come again at this point, as you can see, right over here, right? Rejected again. So it rejected twice at this level, right? Which made it a what? A key level, all right? Which made it quite a key level in the market, all right? And remember, we just on the weekly time frame. We haven't even moved to any other time frames, right? So if we had the bar tool replay, right? What it was going to help us with is obviously prices move, but we can see that price did close above this key level, and then that's why it actually bought again, continue to the upside, right? So let's go to the daily time frame, right? Let's go to the daily time frame, right? So on the daily time frame, what we can see is, right, that price respected the key level. Obviously, it was trying to trap the sellers, people that thought this thing is going to sell. But then it came back again and started what? Started buying to the upside, right? Also, what would have been more confirmation to you to know that, okay, this thing is going up is once price did what? Once price broke this high that the market created and closed above, then you would have known that, okay, price is actually going up to test this key level. So this would have been your what? Your first take profit. You know what I'm saying? This would have been your first take profit. You wait for price to see if you're a risky trader, you would have waited. Let me see if price is going to close above this level or it's going to reject it, right? But if you would have wanted to take your profit, you would have taken your profit very nicely, right? You would have taken your profit very nicely, and then you are out of the market. Okay, you are out of the market. So let's go to the H4. All right, let's go to the H4. Okay, and on the H4, you can even see that you see even more opportunities, right? that when price was at this key level, you see it stayed at this key level because it was still trying to decide whether it's going up or whether it's going down, right?
Yeah.
And how we're able to determine also that this thing is gonna go up, it's not yet done buying, is we can definitely see that this was a correction because the market has been moving impulsive correction, impulse correction, impulse, and this was just another bigger correction that boom 1000 gave us, right? And then we see that price spiked and closed outside of the one, outside of this level. And then for me, when I saw this, I knew like, okay, price is gonna go up. Price is gonna go up. Same as how we saw boom 500 today. Same as how we saw boom 500 today. And like I said, remember this high that I told you about, right? When we saw price closing above this high, then it was our chance to say, let's go to the 1 minute and try to find an entry that is gonna take us to the what? To the upside. You get what I'm saying? So this would have been, quite a beautiful entry. So obviously these key levels will be erased if I'm gonna put the boom and crash strategy. But let me just do this. This was a high, right? This was also a key level in the market. So let's go to the 1 minute and see how we would have scaled in on that one. How we would have scaled in on that one. If we will see it. I don't think we'll see it to its far. It's gotta be far because it happened like when? It happened a while back. It happened a while back. Means it happened a while. When did it happen? Nothing. Just hold on. Why am I not seeing things the way that I'm supposed to see them, guys? Oh, this happened run about, let me do this. Happened run about 21st. Run about the 21st. $21.02. So that happened around 21.02. There's that blue line that we're looking for. We come into it. Come into it. That's the 18th. Okay. You can see the price was still on a downtrend, but it was buying. It was buying for some time. Okay. It was buying for some time. Just want to come to the 21st. Okay, there's that sell. There's that sell. Okay, there we are. Okay, there we are. Just hold on, guys. Let me plug my laptop into the charger. I utilize this laptop a lot. Okay, so you see when we saw price closing above this that high, this is that high that we marked, right? It told us that price has a potential to go to the upside, right? And you can see that price played around a bit on the key level, but we were certain that it has potential to actually shoot to the upside, right? It has potential to shoot to the upside. You can see it shoot to the upside, came back again, to that level just to make you lose the confidence But then if you didn't give up on it and you just waited for price to always come to this level, and you would have actually this is the best one because I marked it like this, right? But you can see how price actually moved out of this level. You look at how price moved out of this level, moved out very beautifully, very impulsive spike, touched the 10 EMA spike, touches the 10 EMA spike to the upside, and then just continued spiking and spiking and spiking to the upside, right? And you can see that here tried gaining momentum. Remember, when price is playing below, when price is playing near the 200 moving average, there's a possibility that it's going to get into the 200 moving average, right? So don't get into that trap. Sometimes don't get into that trap. Even if you get into that trap, let me say you entered here, right? And you use proper risk management, but it doesn't spike from here, right? Because you look at where the RSI was also. The RSI was at the what? At the extreme buy. You can see it was the extreme buy, right? But it took some candles before it can what? It can spike again to the upside, right? So you always need to know that even if you entered here, guys, and you space out your entries quite well, right? Let me say you entered maybe 3 positions here, 0.2 lot size. Price comes here, you enter another 3 positions, right? Price comes here, it gives out the first spike. Then when price gives out the first spike like this, we always know when price gives out the first spike like this, most of the time when price comes back to that level where it just previously spiked, we're gonna receive a massive spike like we did right over here, and you can just hold it. Comes to the 10 EMA spike, touches the 10 EMA, price continues to spike to the downside. And if you knew where price has a potential to go, you would have held this trade. So now you would have switched to your H1. Like, you know what? Let me get into my H1 and hold this trade. Okay. So any more questions, team?
No, everything's clear to me.
Everything is clear, guys, yeah?
Yes, it's quite clear.
All right, perfect, guys. Okay, so let me save this session and I'm gonna send it to you when it's done converting. All right.
All right, cheers, bro.
All right. Thank you so much, guys. I appreciate it. We'll check you guys.
Thank you, King.
Thank you, sir.
No problem, my good guys. Cheers.